Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, we got a lot of people asked today for us to do a video about this headline that has shown up in a bunch of articles. Biden raises costs for home buyers with good credit to help risky borrowers. This article blew up on social media over the last couple days.
It did. And it's really interesting because we had probably one of the longest discussions about any article that we've ever read about it too, because we were going back and forth. We had different positions on it. So stay with us and we'll share with you our thoughts.
Okay, so what we're going to do, we're going to go through the article just a little bit, but then we're going to show the charts. We're going to explain the FHFA. We're going to explain the LLPAs. And we're going to explain the history of all this. And then we're going to try not to get political with it, because that's part of the problem, is this has sort of turned into this political thing. And that's sort of dry, as you know, there's this polarization and with everything, including, ridiculously enough, the SpaceX launch got political. It was a massive failure, all the articles, right? That one.
Okay, so we watched the SpaceX launch. It was great. We had a great time. Congratulations to the SpaceX people.
Yeah.
You got it off the launch pad. You didn't blow up the launch pad. You got way farther than you expected to get.
They got max Q.
And so congratulations. Okay, we're done with SpaceX. Move on.
Okay. All right. So here's another quote from the article. So when you read all these articles, they basically have the same thing. The more Fox News-ish the articles are, it's more of a class warfare slant. And then, if you read more that are more like industry specific, they talk about how this punishes people. Anyway, we're going to just go through here. I'm going to show you the data, and then we're just going to talk about the data, because I think you have more education, you'll be able to understand this whole thing a lot better. Okay.
Right. So all these headlines, honestly, they're just designed to get people emotionally charged rather than giving them the truth and the data and how all of this works. And that's what we're going to try to present to you, is all of that. And then you make up your mind what this is.
Okay, here's the first quote. Home buyers with good credit scores will soon be facing higher mortgage fees as the Biden administration seeks to close the racial homeownership gap and get more first-time and low-income buyers through the door. Okay, I'll just read the next one before we go, because there's a lot of stuff in here. Okay, starting in May, which is May 1st, a new federal rule will upend the current structure of the loan level price adjustment, LLPA matrix. So it's a matrix. I'm going to show you the matrix here in a bit. Home buyers with a good credit score could see their monthly mortgage payment rise by over $60 a month, while riskier borrowers will get more favorable mortgage terms because their fees are reduced. It's a move the Federal House Finance Agency, FHFA, hopes will address the housing affordability challenges in the U.S., but it's come under scrutiny for being unfair and potentially ineffective. Okay, a couple things we're going to just focus on.
Right, so what is it,
FHFA, Federal House Finance Agency.
Not the same thing as the Federal Housing Administration, has nothing to do with FHA loans. Okay.
Let's go through these one at a time. When did the FHFA actually make this decision to change this matrix?
They made it in January, and they go through and revise this every few years. So the last time it was revised was 2021.
They rise in 2021.
Okay.
I'll talk about that a little later when I get the chart up. I want to wait till I get charts up to talk about some of the revisions that were made in the past. Okay. So FHFA, and then the loan level price adjustment. Let's wait until we get to that chart to talk about what those things are. Okay. First of all, who makes up this? Okay. I want to go back to the headline. All the headlines started with Biden. Okay. Obviously, they're just trying to. Right. It's political.
Well, it's clickbaity, honestly.
It's clickbaity.
Because if it says Biden, you're in one of two camps. You love him or you hate him. I don't care which camp you're in, but you're going to click because you want to know. If you love him, then you want to know why you're worshiping him. If you hate him, then you want to know why you should hate him more.
Okay, Federal House Finance Agency. How is that organized? Who oversees that?
So it's really interesting. There are a whole bunch of different political appointees. And they're heads of all kinds of different agencies. And the thing to keep in mind is that while they are political appointees, some of them are from Biden, some of them are from Trump, and all of them are charged with keeping housing going and with overseeing the GSAs like Fannie Mae and Freddie Mac. And remember, the job of Fannie Mae and Freddie Mac is to keep liquidity in the market so that banks have money to loan to people to purchase homes. So this all kind of goes full circle. And while I said at the start that these are political appointees, they are political appointees from both sides.
Yeah, and some of these people are like the Secretary of the Treasury's is the one who actually runs. He's like the chairman of the committee. Mm-hmm. But you have the Federal Reserve Chairman who sits on this committee, and the chairman of the National Credit Union Association, and a bunch of other mid-level career, not appointed people, but like people who have achieved some status in government who maybe might have achieved that status under Bush or Obama, that are just sort of, they have a job. They just run some organization within the thing. And what they do is they have this matrix. So what I'm going to do first, I'm going to put up the matrix. Okay. Now.
And the matrix does not have a really sexy, cool, long coat.
Okay. Keanu Reeves is in here. This is like Where's Waldo. You have to find him. There's a bonus if you can find Keanu in here. Okay. All right. Okay. So this is what the matrix is. This matrix has two factors. It has three factors. It has a credit score, which you can see has all those different, all the way on the left, right? And then at the top, it has the loan to value range. Okay. And then in the
bottom box.
No. And then those give you an added number. Now, that's called an LLPA, a loan level pricing adjustment. So, Oana, why, first of all, is this even here? Like, why can't the banks just do whatever they want?
So, it sure seems like banks do whatever they want, doesn't it?
Seems like it.
So they are federally regulated. And part of it is that, remember, these loans are sold on the secondary market. So because these loans are sold on the secondary market, they have to follow certain rules. And part of the rules are these premiums that are charged on loans depending on the loan to value ratio and depending on the credit score. And if you look at the bottom box, that has different types of purchases and that sort of thing. So that's kind of how this works. The important thing to remember is that this is not new. Okay, that's the first thing I want to say is this is not new. This is not created by Biden. This was not created by Trump. This was not created by Obama. I mean, this goes way back. Okay,
I want to add something to that. No administration, Biden, Trump, whoever, actually controls, like he doesn't just call them and say, do this. These guys are looking at data. They're looking at who's buying homes. They take in a ton of data. In my opinion, an AI should run this. An AI would do a better job balancing this out. I think that AI should run the Fed too. There was the first change to this happened when President Biden first took over, and then all those people that he appointed were on the first committee. They actually did a change. The first change happened in 2021. I'll talk about that in a second. So, I want to, on this chart now, because there's a lot of questions people have. So one of the questions somebody put in the comments was, I'm closing on a house. Does that mean I'm going to get added? Like, are they going to add to my existing rate that I've already negotiated? Because I'm closing in April.
Right.
Like April 15th and the cutoff's May 1st. So what does that mean for me?
Okay, so it means nothing to you. And the reason it means nothing to you is because whatever rate you locked in, this was already built in. Okay, this is always already built into whatever rate you're quoted. Your rate is a compilation of a whole bunch of different things. So it starts out with the base rate, and then they add and subtract things, and they come up with whatever funky rate they give you. So the only thing that you care about is the rate that you were quoted or that you locked in. You don't really care how they arrived at that number, so it doesn't impact you. The other thing that people are going to look at this and go, well, wait a minute. So if people with a better credit score and more down payment are getting punished, and people with a lower credit score and less down payment are being helped, So should I tank my credit score? No.
No.
Please don't do that.
Let me take them through the chart. Okay, let's give an example. You're putting 20% down, okay? Loan to value. So look at that column that says 75.01 to 80.00%, okay? Now, you go to the left and say you have an 800 credit score or above 780. You pay whatever the par rate that the banks charge, because it's regulated, they add on 0.375%. That's like what you pay. Now, if your credit score is 770, you pay 0.625% more. They add that on. As you can see as you go down the chart, nowhere on this chart do you pay more for having a better credit score. The chart actually, you pay more higher interest rate as it goes down. So, and I've got another chart I'm going to show you that we're going to get to in a second. So since this is the May 1 chart, where is this information coming from that these people are being punished? Because if you look at this, you say, wait, if I have a 720 credit score, I pay 1.25%, but someone whose credit score is only 60 points less than mine pays 2.5%. They pay a lot more. So tell them where this is coming from.
So it's coming from a change. Any change is going to impact everybody. So part of what's been done is that they've broken the credit scores apart into smaller increments. And so that's part of the change. But most of it, honestly, is just clickbait. It's just designed to get you emotionally engaged so you will click on their articles.
Okay. What I'm going to do, I'm going to take you out of this chart and I'm going to show you the change. Okay. Now, this is the change. Where you see red, the numbers got worse. And where you see green, the numbers got better. Meaning, so where it says minus 0.75%, previously their LLPA was 0.75% higher, or no, lower, and it went up. So the banks charged them 0.75% more for that loan, say 80.01 to 85%, right? Now, part of the reason why there's these changes is because 720 used to be the highest. If you had a 720, there were no bands. It was just 720 or higher. So they added in these bands, 720, 740, 760, 780. If you put 10% down, let's say you put 20% down and you had an 800 score, right? And now you're thinking, oh, wait, I'm going to be punished because I'm putting 20% down. I have an 800 score. Actually, the opposite. You're getting 0.125% better because remember this chart, it's only punishing where you see the minus signs. So the reds and the oranges, the minus signs. Anywhere you see greens or yellows, you're actually improving your condition. So if you have an 800 score and you put 25% down, you're actually getting 0.125%, an eighth of a percent better than you were if you bought a house 3 months ago, and assuming interest rates were the same, because the LLPA, they added a new category for over 780. And if you go to the right, if you're putting greater than 95% or greater than 97%, so if you're doing 5% down conventional, right, or 4% down or whatever, you do better, like you do a better thing. What people are upset about is where you see the red. You know, you have a 730 credit score, you're putting 15% down, you're paying a higher rate. And then if you go down to the bottom, it's if you have a 640 and you're putting 25% down, you're getting a 1.25% benefit. That's what people are upset about. That it appears because of the change that people are, that better credit score people, and some of this is just a function because they added all these, they changed they split the top the top into four more categories.
They stratified it, yes.
They stratified it. And then they did move the numbers around a bit.
Right.
Okay.
Well, and this happens all the time. Well, as frequently as they adjust these charts, the only difference is that, somebody put out a clickbaity headline, everybody else ran with it. And it's also very divisive, and that's really very unfortunate because they're trying to also make this into a class and race thing. And it's like, these are numbers, and numbers tend to not have class or race. Last time I looked, a number didn't have a race or a class. And they're just looking to have a model that better supports what they're trying to accomplish, which is to get as many people into homes as possible and to keep the housing market stable. This is not about a political thing as much as some of us would love to, go one way or another on that. It really isn't. This is just having to do with money, and while money is political, in this case, this is more a function of economics than about politics.
Yeah, and yes, you could make arguments that based on ethnicity, certain people tend to have a higher credit score, and if I'm of the ethnicity where I average a 760 credit score, and then I'll go back, I'm being punished 0.375%. The change is different. I still have a lower LLPA than somebody with a 680 credit score. And like Oana said, and I'll go back to this other chart here. I'm going to show this other chart. So you can look at the actual numbers. If I have a 760 credit score and I'm putting 20% down, it's 0.625%. If my credit score drops to 759, I pay more, an eighth of a point more. You pay more. So you don't ever want to tank your score. There's no extra thing. The other thing is, it's not like you get a surcharge added to your thing that says, oh, we're adding a $80 per month surcharge. It's
already baked into the rate that you've been quoted.
So, and here's the other thing. If you go, well, this doesn't affect me because I close April 15th. I'm under the old thing.
So not so fast.
Oh, why not? May 1st.
Yeah,
that's
not
today.
So fast. So it just, because your loan is not going to be packaged and presented to the GSA in time to
Fannie, Freddie.
Right. In time to not be subject to this. So basically most loans that have, I would assume that almost anything that has closed in April is subject to this, and probably a good number of the ones that maybe were even closed in March. So if you have not already closed on the house, you're already being subject to this. And even if you have closed on a house in the last 30 days, you may still have been subject to this. Again, it's not a surcharge you would have seen. It's already baked into whatever rate you locked in or you were quoted.
You would not have known about this if not for being alerted.
If not for being very aware of what's happening in your environment.
That's why in January, when this was published, nobody cared about it. There was probably some other hot topic, murder hornets or whatever, right? There was probably some other hot thing going on that everyone focused on. But this is why. News media, mainstream media, whatever you want to call it, makes its money off advertising. So they can see what people are clicking on. We did a video about the Crash Bros, and we showed how all of these, when you type in like housing crash 2023, it had a super, like millions of people search that. So people make videos about that subject so to get clicks, and then they make advertising money, right? The mainstream media is the same thing. So what's happened in the last couple days? All of a sudden, these articles have come out about how Biden is trying to punish people and all this other stuff, and everyone realized that we're getting clicks, so everyone put out their own article. Right. So they could also get clicks, because some people said, hey, the WAPO article. Well, WAPO's behind a firewall. I don't have a subscription to WAPO, so I couldn't read it. But guess what? Newsweek, Business Insider, USA Today, Yahoo is still out there, Yahoo News, like all these crazy, even Brando blogs, like had articles and stuff. We're doing a video on it right now because people asked us, and some of you had questions about it, right? Okay, but here's one thing. In 2021, when Biden first became president, and of course he appointed a bunch of new people, almost immediately the FHFA got together and said, hey, we're going to make some changes. Guess what changes they made? They left the whole matrix the same, but if you were below 680 and you put less than 10 or 15% down, they increased your LLPA by 0.385%, 0.3%. They basically said, hey, we're going to charge all these people more. Who are they charging more? The lowest, people putting the least down, and the people putting with the lowest credit score. Now, you could have made the argument, why is President Biden punishing poor people and maybe minorities, right? That would have been a political thing. Guess what? Guess what? How many articles came out accusing that? Nothing. Nobody cared. Matter of fact, nobody's cared about this until a couple days ago. Apparently somebody put out an article, it started trending, and everyone said, oh my God, look what's trending. And they all piled in on it. I do agree. This thing changes. I went back and I looked at the 2013, the 2016, the 2021, and this one. They certainly change all the time. This was certainly a bigger one. The FHFA did put out a statement saying that they're trying to improve the opportunity for low-income people to still, get housing. But the problem I had was the way it was paraphrased when I read the article. And then I started looking at these numbers going, wait, I don't see, because I was expecting to see like the regressive tax. Like if you had a 740, you were going to get punished 1.5%. And if you were below 600, you would just pay 0.75%. And when you look at this chart here, that it's not even on, it's still, if you have a better credit score, you pay less than a lower interest rate than someone who has a worse credit score.
Right. And then the other thing is, some of the articles I read, it made it seem like the intention was to punish the middle class. And so that's kind of what I take issue with, is all of these articles that just lead people down this rabbit hole of being divisive and of misinformation, rather than just saying, look, this is the chart, this is what it looks like, make of it what you will. Articles that get you emotionally engaged, I have an issue with, because facts should not get you emotionally engaged. Facts should inform you. If you feel yourself emotionally engaged, then stop and think for a moment, because that isn't why you sought that out. You weren't seeking an emotional high or low. You were seeking information.
I'll put this chart back up, the new versus old purchases, the change. I challenge anybody to find the middle class on this chart. You can't just say, well, it's the middle of the chart. Well, there are certainly middle-class people putting 5% down. And, with credit, there are middle-class people with high credit scores. There's middle-class people with low credit scores. True story, at one point, with literally no house payment, no car payment, extremely high income, found out that I had like a really, really terrible credit score. Like a completely horrendous, like no way I was going to even buy a house, like a really, really bad credit score.
So I have to share this with you. When I was 20 and I bought my first house,
okay,
I was very concerned about buying the house and not being able to make the mortgage payment. So before I bought the house, I went out and I got credit cards. I didn't get one or two. I got a lot of credit cards. My goal was to be able to get sufficient cash advances on the credit cards to be able to pay off the house if I somehow was not able to make the payments.
Okay.
Because that's the way my brain works.
That's very Romanian.
It is very.
Eastern, Juan is born in Romania.
Right.
So
well, but if you think about it, it's actually not a bad strategy, because if you take all the cash advances...
It's a higher percentage debt, though.
No. Let's just think it through with me. If you draw enough cash advances and you pay off the house, and then you BK...
Okay, I see what you're saying.
The house is homesteaded and the credit cards are unsecured loans.
This is not legal advice. Do not buy a house on credit cards and then BK.
Okay, but I'm making a point
and homestead your home.
No, but I'm making a point.
That may get reversed. That could get reversed.
So I did this. I did not do that. I never borrowed any money against the credit cards. But the point is, I'm 20 years old. I have all these credit cards. I have a 780 credit score.
That's pretty high.
And I was making $7,000 a year because I was a student.
I know.
It was insane. The point is that somebody like me in that position would have had a 780 credit score, but, got my house FHA through 3.5% down. So, where would I have been in all this? Did it look like I was a responsible person at that point? Clearly, that was not a responsible thing I did.
I know. Okay, so here's a couple things that we're going to talk about. Because we have more information about this, and then we're going to talk about the 1,000th video and some other things. And thank you, by the way, if you're still here, thanks. Okay, first of all, how do you avoid this whole stupid chart? I'll put the chart back up. How do you avoid this whole stupid chart?
I know. You pay cash.
Okay, one is you pay cash. Two, ready for this? Mm-hmm. GSAs, who are we talking about?
Fannie Mae, Freddie Mac.
Right. Guess what? These only apply to loans sold to Fannie and Freddie. Mm-hmm. These are conventional loans. Guess what? FHA loans don't apply. VA loans
Nope.
don't apply. Non-conforming jumbo loans
Nope.
don't apply to this. You actually, right now, right this very minute, if you get a VA loan, you get a better loan than this. If you get a jumbo loan, we were looking at jumbo loans on a house. And when we were being quoted the rate, we said, how is this possible that the jumbo rate is so much better than if we go out and get a 30-year conventional? And they're like, they're just lower. This, you could argue this is artificially making interest rates higher. This could be part of the thing to try to keep inflation down, even though FHFA is not that's not their job. Their job is to promote housing, keep housing balanced, keep housing trying to financing fair for everybody. But there's ways around this. Pay cash. FHA, and anyone can, and you say, but what if I want to put 20% down? Oana, can you get an FHA loan and put 20% down?
Yes.
Can you get a VA loan and put 30% down?
Yes.
Yet the 0% for VA and the 3.5% for FHA, those are minimums.
Right.
They're not how much you have to put down.
Right. What this reminds me of is the taxes at the gas pump, right? You go to the gas pump and it's this much money for you to put in a gallon of gas, right? You don't see all the different taxes that make up whatever it is that you're paying at the pump. It's the same thing with this. You don't see all the different fees or what have you that make up that interest rate that you actually see on your loan. It's the same kind of thing.
Okay. A couple other things that changed. Okay. Lenders for these loans, for Fannie and Freddie, used to have to submit 3 credit scores.
Ooh, so now they only get to submit 2 credit scores.
You don't have to submit the third one. So if you have one that's like really ugly, you don't have to submit it. Also, they used to only take the FICO score.
So now they're taking Vantage 4 and FICO 10?
10 Tango, I think.
Yes.
So remember, there's a bunch of different FICO scores. They always historically just took a FICO score. Now they're allowed to use Vantage Score 4.0. You probably don't know what that is, but if you go on Credit Karma, it gives you like Vantage 3.0. 3.0. Vantage Score is a different pricing model. Vantage Score can also take into account rent payments.
Right. So Vantage is kind of cool because Vantage also keeps in mind things like your utility payments, your phone, like your cell phone payments and things like that actually help you, hopefully, get a higher credit score. So it's really important that you pay everything on time or early so that you have a good overall credit score, regardless of which credit score they're using.
My Vantage score is actually much higher than my FICO, at least the ones on when you go on the website, like Wells Fargo or whatever, it tells your scores.
Mine are the same.
Yours are the same. Mine are substantially different. Okay. All right. So FHFA, LLPA, a bunch of government acronyms. You know what they are. You know that this, and Oana and I don't agree about a lot of this, right? Because
no, that's what took us so long to put this video out, because it took us like a 2-hour long discussion of disagreeing.
Yeah. And, but to reward Oana, she's wearing a brand new dress that she just got today. It's a brand new dress for the video. She, I literally have like the same pair of jeans on every video, the same blazer, which I found out in New York when I called it a sport coat. The guy didn't know what I was talking about. He goes, "What's a sports coat?" He thought I meant like a windbreaker. I go, "It's a sport coat." He goes, "That's a blazer." I go, "It's a sport coat. I'm from the Las Vegas. It's a sports coat." He goes, "It's out here. It's a blazer." I go, "Okay, whatever, but it's a sport coat." Anyway, okay. The whole reason we did this video really was because a bunch of people asked us. They said, "Todd, we need the video. We need you to talk about this in the article." I hope we depoliticize the Biden and Trump and all that stuff. It's, just a bunch of noise. We don't want to get political on the channel, but this, in my opinion, this is when you're making policy and you're doing stuff. This is not a good way to affect change. It's the FHA even put out a statement, and all they really said in the statement is they're just trying to maintain affordability for lower income buyers. But that doesn't really, you could be low income and have a 780 credit, and you could be super high income. Like I was super high income back in the day when we were selling 700 houses a year, super high income. And I'm like, I can't get a loan. Like my credit score is what? Well, you don't have any credit. You've never made a house payment. You don't make a car payment. You don't make any Well, why don't you make credit card payments? Why would I make credit card payments? I just use a debit card. I have one credit card. It has 0 balance. They go, "Well, you're terrible credit." And it's like, that's the stupidest thing ever. I show my tax return. They're like, we don't care. We're not going to you're not going to buy a house. You're going to have to pay cash or something, right? The whole thing's ridiculous. Fortunately, I have VA behind me. Okay. So we hope we answered your questions. If you have more questions, you can put them in the comments.
Right.
Juana, let's talk about the 1,000th video coming up.
Okay, so we're probably like maybe a dozen videos away from the 1,000th video.
I think about, yeah.
And we're very excited about that. So we're trying to find a way to celebrate that. And we were thinking about maybe at some point doing a live stream or something like that. Let us know what you think about that.
Maybe we live stream the 1,000th.
Maybe we do. I don't know. And then we really appreciate everybody who's been giving us feedback about the frequency of videos. It seems that most of you would prefer that we kind of try to still do one a day. And for those of you who called us on our nonsense of trying to keep it to 15 minutes, and of course we haven't been keeping it 15 minutes because we love to talk.
We did like 3 videos that were 15 minutes, and then they all went back to half an hour.
Yeah, and then we lost it.
I know.
So we're sorry about that. We just like to talk.
Hey, Lex Friedman, his videos are 2.5 hours. And he gets like 30 million views on every video.
Okay.
The All In podcast is 1.5 to 2 hours.
Okay, so I've got a newsflash for you. We are not brilliant like Lex Friedman.
I know.
And we are not billionaires like the All In boys.
I think 3 of them are billionaires. One of them is not a billionaire.
Oh, poor guy.
I know.
I feel so sorry for him.
I think he's a decamillionaire, but...
No, he's worth well over $100 million.
Okay, whatever.
But anyway. So no, you know what? Here's the deal. So subscribe, hit the notification bell, share the video, and maybe, just maybe, we'll become billionaires too. Okay?
We need a lot more views. We need you to watch the video multiple times. We need you to go back to because we have monetization on all the videos. So go back to some rando video that we did like in 2009 or 10 when I had hair and stuff, and Juana doesn't look any different. Like, seriously, you'll watch these videos and goes, who's that guy with Juana? Is that Todd's son? Watch all the videos. Get all of your friends to watch all the videos. Like, send them to random people, your parents, your kids. Say, hey, watch these videos. You have to watch them all. There's a magic thing happens if you can watch all 986 or 7 or whatever we have now videos. Yeah.
Exactly.
Please watch all the videos and don't skip any of the ads.
So anyway, going back to, if you think that a live stream would be fun, let us know. And if you do think it would be fun, let us know like a day and time that you think that would be that would work for you guys. We're pretty flexible. So we're just kind of toying with the idea, but we don't have much time before the 1,000th video, so get on it, guys. Get on the shtick.
Yeah.
So thank you for watching. If you're still here, thanks for sticking around. We appreciate you, and we'll see you on the next video. Bye.
Bye.